So I think April was the Liberation Day tariffs. A lot of funds got burnt. But there are a few that actually did pretty well. So Brevan Howard, Rokos, Discovery. So Discovery up 6%, Rokos 4.7%. And then Brevan Howard also up to around 5%. So
these are macro
funds. Yeah. In terms of how they actually made the money, I was reading an article. So a senior macro portfolio manager was talking about how when there was the peak pessimism about Trump changing his mind, that's when they put on positions. That's how they profited big. I think Brevan Howard did particularly well on widening bond yields, the 10-year bond yields, after there was sort of the sort of potentially unsustainable U.S. government debt. The view that was there. So there was some of the funds that actually performed pretty well with the tariff-driven volatility.
Yeah, and I think what I'd add to that is they're not hedge funds, but Citadel Securities and Jane Street are the two powerhouse market makers in the macro world. They just released huge quarterly earnings, so I think that would make sense. They like volatility that has been this year. Certainly in the first quarter, and they're probably ticking along quite nicely. And I think it was Jane Street expecting around 7 billion in a quarter, and I forget Citadel's, but 3-4 billion as well. So that's probably in line with what you expect. The market active and looking to trade, and some previous volatility, the market making firms should tick along quite nicely. It's not like a dead market, is what I'm trying to say.